we are kicking off the last week of May still on volatile footing. To chat with us more about how to position, we have Phillip Hagedorn of ATR Asset Management. Phillip, they did seem to have a reprieve offshore, but then not really sliding into our local bourse here. The PSEI opening again, sliding down 0.3%, 7726.93. What is this week going to be looking like for us?
That's a good question, Danny. I mean, I think I've had a lot of volatility lately. I think most of it really factored on external issues. I think the trade war rhetoric has reached hopefully a crescendo.
Right.
Lots of news coming out of China, I guess, directly affecting the Philippines and the globe. So I think it's still going to be a bit volatile. We're still up year to date. I was checking the charts of the index, and I think we're 70 or 80 points higher than we were a year ago today. So basically the market has been flat.
Right. So we're,
a lot of
we're
volatility
3.5% up year to date. Is this good enough for you? I mean, how does this figure actually?
Well, I think the prospects are up. I mean, I'm optimistic about where we're headed. I mean, I think if you put it into the context of last year, where we are today, last year's index was at the same level, and we were looking at inflation running away from us. We were looking at interest rates moving much higher than we were at this time of year. And the impact and the result was the index touched 6,800 twice, as a matter of fact, or broke the 7,000 level twice last year. I think the prospects moving forward are a lot more exciting for the local markets. Internal factors are positive. The external factors are still weighing down, I think, on investor confidence. But the local factors, beginning with an upgrade, a reserve requirement cut, the interest rate cuts, inflation on its way down, earnings growth above last year. So all in all, the internal numbers look good. It's just that it's hard to buck the trend when global markets are actually selling off.
But when you say, global markets are not such a big threat, does this mean that we're a little bit isolated from the real fundamental trade war issues? Is this all just sentiment?
I think it is a threat. I mean, I'm not saying it's not a threat. I think it factors into what happens across other markets. But if you look at our valuation, our earnings growth, our macroeconomic indicators, and some other factors such as the upgrades, the outlook is quite positive for the Philippines. Can we separate ourselves from the rest of the world's markets? Probably not so quickly, but you should have confidence to be able to look at this market and see value and say, well, on these opportunities, on these sell-offs, there's a good opportunity to pick up stock. And I think that's the view that we have. So we haven't even changed our outlook for year end of around 8,500 for the index.
Do you think that foreign investors have this same outlook, given that they've been selling off and there's been this flight to safe havens, as they were mentioning? Shouldn't they be picking out the standout players like the Philippines?
They should. The problem is, I think the Philippines is not a very big weight in the scheme of things. So to pick an outlier like the Philippines while the rest of the markets globally are in a bit of a turmoil, it's a big call for an asset manager. So, but I would point out that a year ago the peso was much stronger than it is today. So as a foreigner, you have 1 year of earnings that have been built up in the index. You have a currency that's lost significant ground and now at the 52 to 53 level. You have earnings growth faster than we've seen in the last 4 or 5 years. So there is an opportunity. It's just difficult to make the call and pick the Philippines outright out of the rest of the countries that you can invest in.
But we did already see, I mean, look at this. Year to date, we're still in net positive foreign inflow. So what would it take for this reversal to actually happen after this 15 straight days of net foreign bleeding? Especially after, you did mention earnings coming out, RRR cut already there, loosening of monetary policy.
I think it has to do with global markets settling down. I mean, like I said, we are standing out, but the Philippines is less than 2% of Asia Pac market. So to pick the country and make a big call on it at this point would take a lot of guts, I think. As a local manager, with the long-term outlook we have no problem going long. We have no problem looking at sectors and the two sectors that or three sectors that we've really focused on have been the property, financials, and the consumer sector. And I think we'll continue to look at those sectors as growth sectors for the country.
How would you play the index now? You did mention valuations here, so it's sliding down a touch already, around 16.2 forward. Is this a good time to be picking up, especially since the analysts have such a broad range on what the support levels and what the resistance levels are right now?
Well, first of all, I think if you look at the chart, we very rarely drop below 15 times.
Okay.
So, and the only time that we traded up at the 20 times level was after we got an upgrade.
Okay.
So I think what you can say now for the Philippine market is there is a range of multiples that we can trade within. The low end being around 15 times and the high end being around 20, 22 times, which is what happened when we got the upgrade the last time.
Okay.
What does it take to trade at the high end versus the low end? A lot of that is sentiment driven. A lot of that will have to do with results and fundamentals. But in the end of the day, the fundamentals are on our side. We're seeing earnings growth this year stronger than previous years. We're seeing a valuation lower than previous years. And we're seeing a currency that's already at 52. So as a foreign investor, I don't know, what do you wait for? Do you wait for 12 times and the peso at 60? That's not going to happen, right?
In terms of earnings there, you mentioned, we are earning, but was this actually better than expected, especially the first quarter?
I think it's in line. I think, when you look at the results so far, on the core side, reported earnings, we're seeing them at around 14% for the first quarter. When you take out the extraordinary stuff, around 9%.
Right.
Our view was about 10 to 11% for the year. Okay. So we're kind of there. I mean, I think there are some numbers that some companies that reported ahead of expectations and some a little bit behind. But generally, we're satisfied with where the numbers are. And I think, you can see
the rest of the year. Do you have an outlook on a call on the earnings growth?
Yeah, well, we're still sticking to our about 11% earnings growth number. We saw the weakness in the first quarter on the consumer side. I think part of it may be due to the delay in the budget. And I think the other sense is that maybe this campaign season, the money wasn't flowing as much as it normally does in campaign season. So a little bit of a disappointment on the consumer side. The property sector, still robust growth, some better than others, but still generally good. Now a big question mark with the latest news out of our DFA.
Let's talk about that, actually, the property space. So, the prices at an all-time high here, and people very, very bullish on this. But then you've got other reports saying, for instance, office vacancies projected to go up to 8%. You've got the POGO crackdown here, and you've got the BPO sector actually softening worse than expected. So what is this all going to how will that feed into
our view on property is that the exciting story for property is the countryside development. It has a lot more to do with developing second cities and how that is going. I think areas like Western Visayas, Central Visayas, Davao, that's going to be the focus of property development and where the upside for land values will be. It's very hard to call an upside for land values in BGC when you're talking about, I don't know what it is. I can't even guess anymore. 800,000, 1 million pesos per square meter. I mean, that's a tough one. But if you look at outside, in the north, you've got areas like Clark that are developing very quickly with infrastructure coming out there, the rail about to kick off. In the south, you have areas like Cavite where a lot of infrastructure is being built and homes and property is developing. So I think the play for property is not NCR. The play for property is us. We build infrastructure around the country, that land values around the country start to improve, and that's the upside.
Okay, last question on the property space. So we had some reports of analysts saying that this hike in interest rates that we saw last year would, dent it in this year still. So there's still a lag on that. Which ones might specifically be affected here in terms of that? And will that be able, will that actually dampen the prospects of the property space?
Well, I don't think so, because I think what we saw was the fear came in around October of last year when rates peaked. But since then, rates have come back to very manageable levels, and we're seeing potential of rate cuts.
Okay.
That's why I think we saw a bit of weakness in the numbers in the first quarter, that people kind of held back in the fourth quarter and first quarter of this year, seeing where rates were. Mortgage rates went up a little bit. but quickly came back down as well. So I think that lag in the fourth quarter and in the first quarter is probably what explains a little bit of the weakness of bank loan growth in the first quarter of this year. But the demand is still very, very strong, and there's still so much demand for housing, for property, and I think that is something we can bank on. It's a question of time, but I don't think that interest rates, well, first of all, they scared people last year, but they're moving back to levels where I think normal bank loans and mortgages will continue to grow.
So hoping for some normalization there for the property space, but also for our local bourse, but nevertheless keeping an optimistic long-term fundamental outlook on that.
You have to be. I mean, I think I'm happy to live in the Philippines and not in any other part of the world because of this growth, this investment that the government's doing on the public space will result in earnings growth. And we think that there's a large underestimation of what earnings growth could be in the next few years. So we'll be at 10,000 before we go to 6,000. That's our view.
Well, let's hope for that. Thank you so much. Keeping the faith, Phillip Hagedorn.